Hello from the Tugas Copy TV studio in Geneva. We are back with our weekly technical analysis with Jean-Francois Owczarczak from the Management Joint Trust with their products fingraphs.com. Jean-Francois, welcome to the studio.
Hi, Daniel.
The quantitative easing program of the European Central Bank has been launched yesterday on Monday. So this move was quite controversial. But the stock markets have been, of course, applauding to this. But what does the situation look like, and what is your point of view from the system FinGraphs?
Okay, we'll turn to the charts. We are on our usual mosaic here. We have euro dollar, cable, dollar, euro Swiss, gold, dollar Swiss, dollar yen, Brent, and the S&P futures. We'll focus on the currencies first, and the quantitative easing program in Europe has had a supporting effect to the dollar and to the weakness, or to the continuation of the weakness to euro dollar. And at the moment we've reached on our hourly charts here, so the perspective over the next few weeks, our impulsive down done. The dollar has also seen strength against the cable, so we're not quite an impulsive down done, but we have gone a long way already. Against dollar Swiss, we even initiated an impulsive 2 target, so that's a very extended target. We might see it on the euro 2 to the downside over the next week or so. And a dollar yen also impulsive up done, but could also turn into an impulsive 2 into our extended targets. But we'll first start with euro dollar and have a look at this investor's view, which is the perspective over the next few quarters with the weekly chart, over the next few months with the daily chart, and over the next few weeks with the hourly chart. And we'll start with the weekly, which is still in a bear trend, has been now for about 6 months. We had targets below 110 at the time, now we're below 110. Where do we go next? Well, we're slowly getting into our targets here, but it still would have the potential to bring us down to 104 over the next quarter or so. The time allocated for this projection is not quite over yet, and it may extend a bit more. But basically what it says here is that the potential is not fully, we haven't reached the full potential yet to the downside. The risk index is in the oversold, but it's just entering the oversold. It hasn't seen a very wide exaggeration yet. It is far away from reversing up yet. So it's still being a downtrend on euro dollar. A perspective target towards 104, but maybe more. On the daily, we're very much extended at this point. I mean, it's also bear. The impulsive 2 down has been done. So our targets are really fulfilled now. They were actually pointing towards 111.70. We're much lower at the moment, so it's a very widespread exaggeration in this move. Yet it is not over yet. There's no stress on the envelopes. Our risk index is not even oversold, so the trend is your friend, and it doesn't seem to be over yet. Now, in terms of targets, we'd rely on what we have here on the weekly, so in the direction of 104. On the hourly, the recent sell-off has fulfilled our impulsive down targets. We could ignite further potential with impulsive 2 targets. We don't see a reversal quite yet as we speak. We do have an exaggeration on the risk index, but it could still go lower, and it hasn't turned up yet. We have some exaggeration on the envelopes, but usually when you have a strong move like that and you have the 2 envelopes that touch each other, with the larger envelope still heading aggressively down, you're usually talking about an intermediate bottom. So you could expect some kind of a correction this week, but in general the move doesn't seem over yet.
So it's a continuation of the downtrend of the euro so far?
At the moment, yes.
Also, when we look to commodities, to gold, there's also a continuous downtrend. Is this, did this picture actually change?
Let's have a look. So last week what we were saying is that the correction up seemed to be over, it was done, and the hourly was resuming the downtrend. This in context, this is again an investor's view, a combination of a weekly, a daily, and an hourly chart. And as you see, the message here tells us potential resume downtrend in a pullback period. So we had the pullback period here, and now we're resuming the downtrend. The longer term weekly chart is still a negative. It seems like the move that we saw late last year, early this year, was a correction, and that we're moving lower into our targets. Our targets are between 1206, which we have already reached, and down to below 1000. If we take an average here, we're around 1100. So we'd expect still about 60-70 points of a potential over the next few quarters to the downside if we were to take the average of this target zone. Now the risk index also is not oversold, is approaching the oversold zone, but it's not. We can't really call this an exaggeration at the moment. So that would leave some space for some further downside over the next quarter or so. Now, if we look at the daily, we corrected up. Corrective up done, says the machine. The envelopes are slowly reversing. They're not in a downtrend yet, but they will soon be. No exaggeration here also on the risk index, so we expect a further downside here over the next month or so. And then on the hourly, we're moving lower. We're already in impulsive 2 targets. There's a bit more to go, down between 1130 and 1154. The risk index is just entering the oversold zone. It still needs to get down there, turn around and move back up. So we're not there yet. So there's probably a bit more to go over the next week.
So another commodity which is interesting this week is the Brent. Can we have a look at that?
Well, have a quick look at it. It's interesting because it has had this huge sell-off late last year, on the second half of last year. We believe the potential is not over yet. We had an intermediate bottom, which was done earlier this year. We see the reaction up. It is in a resumed downtrend again. We could well see the exaggeration that we had here in January. Our impulsive 2 targets are quite aggressive. They're pointing between 42 and 29 over the next month or so. Now, we're not quite there yet. The hourly is consolidating down. It would really need to move below the 55 mark to reaccelerate to the downside. So it's only a correction in a downtrend. If it were to move into an impulsive mode, we'd have all 3 bears in impulsive down, and that'd be quite negative.
If we look to the equities, there has been a correction down for the S&P. What can we say?
Well, a bit of concern here. I mean, generally, equity markets still seem to be heading up. If we look at the weekly, we are looking at extended targets, impulsive 2, between 2200 and 2400, maybe even a bit above. We do see some exaggerations here on the risk index, some exaggerations here on the envelopes. They're touching each other. So these targets are tentative, the impulsive 2 targets, but at the moment the trend indicator is still heading up, so we would expect them to be fulfilled over the next few quarters. On the daily front, similar story. I mean, we've seen this a correction down, the breakout, probably a retest at this stage. We could see the oscillator is pretty much in the middle and could be positioning itself for a new move up. Still some space into the upside targets. The 2100 we have already reached, but we could make it above, well, up to 2180, 85. So we believe that the correction should be temporary and that it should resume its uptrend at some point. Now, looking at the hourly, a similar situation as on oil. It's correcting down. We wouldn't want it to go below the corrective targets. We're pretty close to them. It's 2051 here. If we were to move below them, that means an impulsive move down in several weeks of downtrending markets. So that could cast doubts over the daily and the weekly, but we're not there yet, so we have to watch this correction.
Jean-Francois Owczarczak from the Management Joint Trust, thank you very much for sharing your expertise with us today.
You're welcome.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.